Hey everyone, welcome back to the channel. Today we're diving into a popular technical analysis tool used by traders worldwide, the MACD indicator. So what exactly is MACD? The Moving Average Convergence Divergence MACD is a momentum indicator that shows the relationship between two moving averages of a stock's price, helping to identify potential buy and sell signals based on changes in momentum. This is how you add the MACD indicator to your chart. MACD consists of three key components: the MACD line, which is the difference between the 12-day and 26-day exponential moving averages and shows short-term momentum relative to the longer-term trend; the signal line, a 9-day EMA of the MACD line that smooths out the data to help identify trends; and the histogram, which shows the difference between the MACD line and the signal line. A positive histogram indicates bullish momentum when the MACD line is above the signal line, while a negative histogram signals bearish momentum when the MACD line is below the signal line. To use the MACD in trading, look for a bullish crossover when the MACD line crosses above the signal line, indicating a buy signal, or a bearish crossover when it crosses below, suggesting a sell signal. Let's take a quick example. Notice how the MACD line crosses above the signal line, a bullish crossover suggesting a potential buy opportunity. When the MACD line crosses below the signal line, a bearish crossover indicate a potential sell opportunity. Remember, it's important not to rely solely on the MACD, but to use it alongside other indicators. If you found this video helpful, don't forget to like, subscribe.